By now, I feel like I'm starting to sound like a broken record. Home prices are going up, inventory is going down, and the market is not slowing down. Hi, this is Katarina with Realty One Group Coastal, and today I'm doing a market update video for 2021 Charleston real estate. First, I'll be going through Charleston Trident Association of Realtors' annual market report based on local data. Then I'll be looking into the South Carolina economy as a whole and outlooks for 2022 for Charleston and nationwide. First, the graph that I'm sure everyone wants to see is sales price. The median sales price has increased by about 12% from 2020 to 2021, and the median sales price of homes in Charleston has increased by 16.7% since 2017. Something interesting to note is the top 5 areas with a change in median sales price are Sullivan's Island, Isle of Palms, Seabrook Island, Kiowa, and Daniel Island, so some of the most expensive real estate to begin with. This graph is perhaps the most telling of Charleston real estate over the past few years. Prices rose by 12.5% in 2021, and rents rose by 14%. As you can see in the lighter blue graph, the median sales price has steadily increased, while the months of supply has dwindled. And on the left here, you'll see closed sales which have gone up, but inventory of homes for sale has decreased by more than 50%. The days on market until sale for 2021 has decreased by 54% to an average of 23 days on the market until sale. This percent of original list price received on the right shows that most homes did receive about what they were asking for at 99.4% of the original list price. Here's another statistic that shows the month supply of inventory. At year end, there was only 1.1 month supply of new construction and 0.6 month supply of previously owned homes, which is the lowest it's ever been. I talked about this in my last market update video as well, but distressed homes and foreclosures are another thing that I wanted to touch on. Here you'll see that the percent of closed sales that were distressed, so on the brink of foreclosure, were only 2.6%, which is such a small share of the market. In the past, foreclosures were typically rundown properties that you could buy at an auction for a very cheap price. However, the 4-year change in price for foreclosures was an increase of 68.4%, which shows that even if more foreclosures came to the market, they would be picked up by investors and absorbed into the market without too much of a dent. Now for an area overview, the Charleston area as a whole had 24,000 closed sales, which was an increase of 10% since 2020. Berkeley County led the Charleston area and the percentage of new construction at 30%, whereas the average was 19.5%, and Dorchester County had the least amount of days on market. This report has a lot of numbers, so I'm not going to go into each one, but it does go through each area of Charleston and describes the median prices since 2017 and the changes year over year. For the whole Charleston area, the change from 2017 has been 39.2% of an increase in median price. One of the problems with Charleston being in such high demand and inventory being so low is that more and more households are becoming cost burdened. In a study done by Anderson Economic Group along with Charleston Trident Association of Realtors, they found that 76,000 Charleston metro area households were classified as housing cost burdened in 2019. This means that they spent more than 33% of their income on housing, so their mortgage or their rent. This study found 3 strategies that they think could improve the Charleston affordability situation. 1 is expanding the use of accessory dwelling units, 2 is increasing funding for affordable housing, and 3 is zoning for greater residential density. Now for the South Carolina economy as a whole, Joseph Von Nessen with the Darla Moore School of Business at the University of South Carolina did an amazing presentation on the 2022 South Carolina Economic Outlook. Here you'll see that South Carolina employment dropped off with COVID, however, we've recovered strongly. They were able to break down the employment sectors even further so you can see the gains and losses by industry sector. Leisure and hospitality has been the industry that's been hit the most, and they still need more employment to be recovered to pre-COVID levels. As far as South Carolina's GDP, we're actually outperforming what we were before COVID hit. Our cumulative growth is steadily increasing, with consumer spending leading this graph in growth. One thing you'll notice driving around Charleston is that everywhere seems to be hiring. The reason for this is that businesses have expanded their labor needs. Production levels are needing to be higher than they were before the pandemic, so businesses that lay their employees off now have to get those employees that were laid off along with extra employees to help with this production level growth. As far as why consumer spending has gone up so much, federal stimulus has played a big role in that. U.S. disposable personal income grew along with the federal stimuli, and now will start to level off more without those stimuli. U.S. personal savings also shot up with the federal stimulus checks. You'll see they go up, and now they're returning back to be 1.5% versus the trend. This is another graph that I found very interesting. If you look back in 2011, the majority of homes that were selling were under $200,000. Only 9.7% of homes were above $500,000. In 2016, the same was still true. The majority were below $200,000 or at least under $300,000. However, as of 2021, this has entirely shifted. 28% of homes were above $500,000 and only 6.4% were below $200,000. So what do we expect to see for South Carolina economy and the housing market in 2022? Home prices will continue to grow with employment rebound and growth and population growth, but we won't have federal stimulus and low interest rates anymore since the Federal Reserve will likely be raising rates, so those will slow the demand just a little. Some threats that they noted in 2022 and beyond was the short-run economic threat of high inflation, and in the long term, it's ongoing labor shortages. South Carolina is third in the Southeast for net migration rankings, with a 10.3% net migration percentage. However, about 70% of these people are over age 55, which would imply a 2-to-1 ratio of new consumers to new workers, which implies that we need even more of a labor force to meet this new consumer demand. Lastly, I wanted to talk about new construction for the United States as a whole, because it plays a huge role in the housing market. One of the reasons for this low inventory of homes is that not enough homes were built after 2008. Many builders got hit as a result of the recession, so less homes were built in the decade following than any other decade previously. This study by Rosen Consulting Group found that the underbuilding gap in the U.S. totaled more than 5.5 million housing units in the last 20 years. And when combined with natural disaster or functional obsolescence of homes, the implied cumulative housing demand supply gap totals 6.8 million units. This shows that there's a severe gap between the number of homes that are built and the number of people who need new homes. New construction keeps housing affordability low. Because of this underbuilding gap over the last 2 decades, the number of young adults having to live with parents surged, and it shifted the age of existing housing stock. So now if you buy a home, it's older, which incurs ongoing maintenance costs, and it makes it more likely that these homes will reach the point of functional obsolescence in the coming years. As we all know, the COVID-19 pandemic did not help anything, and it only made this month's supply of inventory worse. Builders simply can't keep up with the demand now, so in order to help this inventory and affordability crisis, we need more new homes. Thanks for listening. I know the numbers can be kind of boring, but it's really important to know what's happening in the economy and what's happening to the housing market, even if you aren't considering buying in the coming years. Historically, sales prices continue to increase year after year. So if you're waiting for the market to crash before buying, I urge you to think again. So to summarize, inventory is still extremely low, demand is still extremely high, interest rates on homes are expected to go up, which makes buying a home even more expensive. But the South Carolina economy has recovered, and now the biggest threats are inflation and a labor shortage. Thanks for watching, and next week I will be doing a Charleston areas explained video where I explain each area of Charleston and why it might be the best place for you to move.